Hello everyone, it's Wednesday, August 27. Today we're analyzing the euro and British pound charts to gauge potential market trajectories. The euro traded broadly flat against the US dollar yesterday. Early in the session, sellers made several attempts to push the euro-dollar pair below 16.06, but failed, triggering a modest bullish correction within a wide sideways range. Later, however, upside momentum faded as selling pressure intensified near 1.1658, coinciding with the release of US consumer confidence data. The index came in at 97.4 in August, beating forecast by slipping from July's 98.7. While the report offered limited support to the dollar, it was enough to hold the currency's decline. US durable goods orders also came in stronger than expected. Economists had forecast a 3.8% decline, but orders fell by a milder 2.8%. The better-than-anticipated data gave the greenback a modest lift. Now, let's take a look at today's macroeconomic calendar. It includes Germany's consumer confidence data. The index is expected at minus 21.3 in September, only marginally better than August's minus 21.5. This suggests that the impact on market sentiment will be limited. If the reading matches forecasts, the euro is likely to remain under pressure. In the UK, the Confederation of British Industries retail sales balance is due out today. Given its weak trajectory, the release is unlikely to spark gains in sterling. Across the Atlantic, the US calendar is relatively quiet, with attention centered on the speech by Fed official Thomas Barkin. His comments will be closely monitored, as Fed policymakers have recently sent mixed signals, especially following Lisa Cook's dismissal and a broader shift toward a more dovish tone. Despite this tilt, the dollar has yet to show significant weakness, leaving traders searching for clarity. Barkin's outlook on the Fed's rate path could therefore prove pivotal. Fundamental drivers have lost some sway in recent sessions, with market attention largely fixed on upcoming US GDP data due later this week. As a result, today's trading is unlikely to deliver major surpasses. From a technical perspective, the EUR USD chart shows that a decline followed by a false breakout at 1.1606 would generate a buy signal, opening the way for a recovery to 1632. A breakout and firm consolidation above this mark would extend gains towards 1658, with a more distant target at 1691. Short positions on the rebound would be attractive at this level, aiming to capture an intraday correction of 25-30 pips. Short entries at 1658 and 1632 would be justified if a false breakout occurs, with the downside target being a move below 1606. Breaking below this level would strengthen the case for adding to short positions, with target at 1567 and potentially 1530. At this mark, long positions on the rebound could be considered, aiming for a 20-25p move. Long entries at 1576 and 1606 remain valid only in the event of a false breakout. As for the British pound, a false breakout at 1.3446 would likely keep trading range-bound, with sterling rebounding toward 34.85. At this level, sellers are expected to step in. A breakout and firm consolidation above 34.85 could open the way for further upside to 35.23, with a more distant target at 35.60. At this mark, short positions on a rebound would look attractive, aiming for a 25-30 pip correction. Short positions at 35.23 and 34.85 would be valid in case of a false breakout. If, after a modest bounce from 34.46, buying interest proves weak, the pound could slip below this level and hit a new low around 34.19, where long positions on a false breakout would be considered. Alternatively, long entries could be set at 33.90 on a rebound targeting an intraday correction of 25-30 pips. Good luck to everyone.